Hello, it's Simon Gray from Real Tail Trader, back with another video and just a quick walk through some of the things I am looking at in the currency markets, the FX market, the forex market, whatever you want to call it. I trade 15 pairs and I'm going to show you 3 or 4 different things I'm looking at currently. Just a quick heads up, the disclaimer. This is not an advisory service. I'm not suggesting you do any of the things that I'm doing. Before you trade currencies, you should know what you're doing. You should take some advice, independent advice. But what I'm sharing here is just some of the things I'm doing as inspiration. If you are a retail trader, that some of the things I'm doing may be of interest, or some of the things you can bring into your strategy. But do not follow what I'm doing unless you get some proper advice. So there's the disclaimer. The currency markets are a very volatile place to be, and you have to know what you're doing. And I've been doing this for quite some time now. So let me just talk you through a number of the things that I'm looking at the moment, and then I'm going to talk to you about a very specific trade where I am pyramiding my profits. A lot of people pyramid their losses. I'll talk a bit about that, but how you pyramid your profits and protect your capital. I'll talk about that in a moment. But let me talk about a few trades. First trade I'm in at the moment is long on the pound Aussie dollar. So buying the British pound, selling the Australian dollar. This signal showed up this morning on my 4-hour chart. You'll see that I have a crossover of the 10 exponential moving average. It's crossed over my 50 simple moving average, which is a clue there may be some upside momentum. I've got one of my proprietary signals here, an XY signal. I put my stop outside of that. Gives me a clue that there may be some upside potential. I'm looking for a 1-to-1 risk, which is here, to reward ratio to take off half my position, and then we'll let the rest ride. Now you might think, well, that's quite an unusual place to take a long position, and you might be right. Look at what the market's done. It's dropped here. If I jump into the daily chart, look, we've got all of this drop down here. But what's interesting when you take a closer look, and I like to look at the higher time frames, this is the weekly chart, you will see that last week we stalled at the 200 simple moving average on the weekly charts. This week there has been buying off that 200 simple moving average, and I always see the 200 simple moving averages as really a barometer of sentiment. If we're above it, then good indication that we're quite bullish on the pair. If we're below it, then I'm probably more likely to sell it. So that's one of the reasons that I've bought this pair. Trade may not work out, doesn't really matter. It's just one of many trades that I'll make. But there's a probability, and a high probability, I believe, that we may get up into these highs here. Once I get here, I'll roll my stop to break even here, and then I've got a free trade. You'll notice here we've got higher lows, we've also got higher highs, so we could be in a position where the trend is going the opposite way to what we've had here. Downward trend line, looking for a break above that. We've got some structure levels here. Those people that have sold the market here will have their stops here, maybe here. What I'm looking to do is to see the market push up into those stops. Of course, if somebody's selling, their stop loss will get them to buy back the currency, which adds buying pressure to the market, to the upside. And it's that buying pressure, it's those stop runs that really cause the market to move quite quickly. The second trade that I've got is I am selling the euro against the Japanese yen, so buying the Japanese yen effectively. This is a range trade. This is the daily. In fact, no, this is the weekly chart. And what you'll notice on the weekly chart here, before I jump into the daily, is that the 200 simple moving average sits at the top of this range. And look, we tested that, and then we've come down on the week, last week and this week. If I go into the daily, what you'll see here is that I classify this as a range, because I've got a couple of touches at both ends. One touch, two touch, one touch, two touch. That's a range to me. So I've sold up here, and on the day we're testing the 50 simple moving average. If I jump into the 240, the 4-hour chart, what you'll see here is that I have two positions on. Effectively, I sold one up here at the top of the range, up here rather, and then sold again here when we closed below the 50 simple moving average. We had some sideways consolidation and then we broke down. We're currently testing this 200 simple moving average, and if we close below that at 6 o'clock on the 4-hour bar, I will probably sell again, depending on the strength in this particular bar. So to build in 3 positions, which is what I tend to do on my trades. I like to pyramid into the trades once they start to work. So that's what I'll probably be looking to do. Let me just show you this here. Where are we? Just not liking that. Technology is great when it works. So if I draw that level in there, and let's make that something. That's the only problem when you've got lots of stuff on your chart. Let me see if I can catch it there. Yes, okay. So let's make that thick, and let's make it, I don't know, let's make it lime green, and let's put it on all charts. So that's at the 200 simple moving average on the 4-hour chart. If I jump into the daily, look where it sits. Same as the 50 simple moving average on the daily. So this is an important level for traders, that traders are going to be watching. If we get a strong close below this on the day, if we get a close below this on the 4-hour chart, I believe on the balances of probability, there is probably a good indication that we are in for some more downside move. Now there is, I believe, I need to check this later, but there is some Australian news out overnight. What that might mean is I roll my stops on my existing positions to break even, just in case there's a news that reverses. I don't like to get caught out by the news. Obviously, if the news propels things lower, then great. But if it doesn't, well, I'll be out. I'll be out with a profit on this particular trade. So let me jump now into my major pairs. I trade 15 pairs. Generally, I am probably in 3 or 4 trades at any one time. I try and avoid what I call correlation risk. So correlation risk is, for example, at the moment I am buying the pound Australian dollar, so I'm selling the Australian dollar, and as you'll see on the screen here, once this page loads properly, I am also selling Australian dollar versus US dollar. So I'm buying the US dollar, selling the Australian dollar. So, you know, double the risk there. But I don't mind correlation on 2 pairs. Any more than that, I tend to avoid trading that particular pair. So I'm not looking to have a position on in all pairs at any one time. What I'm looking to do is to take the best opportunities. And when I have an opportunity that's working, I'm looking to maximize that opportunity to the absolute max. So let's just say yes. Okay, so this is loaded. So let me show you this. This is the Australian dollar. Again, a range sell here at the top of the range. If I go out to the daily, you will see that we have the daily 200 simple moving average at the top of the range. This is something I like to see. Higher time frame, simple moving average at the top of a range when I'm selling, or at the bottom of the range when I'm buying. If I go out to the weekly, what you'll see here is, okay, we're not quite close, but we've got the 50 simple moving average and the 200 simple moving average above this position. So you know, potentially some more downside potential. I don't know, but potentially there is. If I look at the 240 chart, the 4-hour chart, I'll just explain to you what I'm talking about in terms of pyramiding profits. And what's interesting is I've got 3 positions on now, I should say. I had 2 positions here. I sold here at the top of the range. I then sold here once we closed underneath the 50 simple moving average and the 10 exponential moving average are crossed over. This is a trend trade signal for me, albeit within a range. I sold again there. And then today, shortly after lunch, this is the 2 o'clock bar. I sold again because this bar closed strongly below the 200 simple moving average. So I'm sold again here. So probability, we're going to go down to here. Don't know that. We may go beyond here. We may reverse and I may get stopped out. But what's interesting is my first two positions, when my stop was up here, if I'd have been stopped out, I'd have been stopped out for a loss on this trade. Now I've got myself into a position of having quite a high level position, or committed financially to the downside on this pair in terms of pounds per point. But what I haven't got is any risk to my capital. I took some profit here on my first position when I got a 1-to-1 risk reward. When price extended to here, I took off half the position, so I have that profit in the bank. I've rolled my stops continually, trailing stop here. So this trailing stop is now inside my entry point on position 1 up here and position 2. So if I take the profit I've already made by taking off half the position here, and I factor in the fact that if this price does reverse and stop me out, I've got a profit on positions 1 and 2. The loss on position 3 is more than covered by the profit I will have in the bank. So I preserved my capital. So essentially, this is now a free trade. If we get down to here, I'll make significant profit. If we reverse back, I'll make a small profit. But what I'm looking for is the bigger profits. And I read recently Pitbull by Marty Schwartz. I've read this book a couple of times. You can find this on Amazon. Got a orange cover. You can't miss it. Really, really good book on trading. And what he says in there, and I caught this the second time of reading, important message that on the majority of his trades, and he was one of the most, or is one of the most successful traders in the world, on the majority of his trades, he won one, lost one, won one, lost one. So his wins would equate to his losses, and he'd kind of tinker along and kind of break even. But every now and again, he had an opportunity to make big money on 1, 2, or 3 or more trades, but it was the big winners that paid for the year. So that's really what I'm looking for, the big winners. And this has the hallmarks of potentially being a big winner. May not be. Who knows? Who knows? My job is to execute in line with my strategy and to see what the market does and to follow what the market does. So this is pyramiding my profits. So selling here, selling here, selling again here. So pyramiding into a position. Now what a lot of losing traders do is they do the opposite. So if I'd have sold here and the market had gone up here, if I was a losing trader or losing mindset, I would have perhaps sold some more here, kind of trying to average my loss. If it had gone up here, I might have tried to sell some more here instead of getting out of the market. And that's the wrong approach. So you don't average your losers, you power up your profitable trades. And that's how you can make decent money in the market while preserving and protecting your capital. Because if you lose your capital, you don't have any powder dry to trade the next day. So even if this turns out to be a small winner, okay, great, I've got quite a decent profit in at the moment. If it's a small winner, well, that's fine. But it has the potential to be a big winner. And successful trading is about cutting your losses short and letting your winners run. And this cannot be a losing trade now, unless there's massive slippage, unlikely. Yeah, we'll just see what happens. The final trade I've got on at the moment is on the US dollar, Japanese yen. This is the weekly chart. You'll see top of the range. This is the yellow box range. Price resisted the 200 simple moving average last week. We're testing it again this week. This has been a bit of a frustrating trade, and normally I would have got out of it probably by now. If I drag across here and show you if I can get this to fit the page, yeah. So as you'll see, not a lot's happened. We've gone back and forth, back and forth, back and forth. The market can't take up its mind. Make up its mind. Normally I would have got out of the trade probably by now. It's taking too long to work, and in my experience, if a trade takes too long to work in your favor, best to get out of it. But if I look here, okay, you can see the same story. Again, these are 4-hour bars. If I look here, but think about what the bigger time frame is telling me. Well, the bigger time frame is telling me that on the weekly chart, we are below the 200 simple moving average. We're testing it. That is upside resistance. So while we continue to hold at around about this level, on the balance of probabilities, I believe this is worthy of still holding, only because that weekly 200 simple moving average is at the top of this range. But time will tell. Again, looking to take off half of my position here. Then if we get down below here, I might consider adding to the position in a very similar way that I've done on my Australian dollar, US dollar trade, and may do on my euro, Japanese yen trade. The last thing I wanted to say, and this jumps back to my British pound Australian dollar long. Having an opinion in the market is a sure way to the poorhouse. You can't have an opinion in the market. And if I'm based in England, if I look at the news every night, and I do watch the news, I like to know what's going on. We've got the talk of Brexit, and the pound's going to crash out of the euro, and it's going to drop by 20%, which makes it very difficult from a psychological perspective for me to buy the pound. But it's my job not to have an opinion. It's my job to follow the signals in line with the strategy that I've set myself, that I know on the balance of probabilities will pay me a profit. Very simple strategy, range strategy and a trend trading strategy. My job is to cut my losses short and let my profits run. Now, if I had an opinion, it would have been very difficult for me to buy that particular pair. And that's one of the things you have to be very careful of in the market, having an opinion. I write a journal every day. I record my trades. I screenshot my trades. I'm constantly observing and asking myself questions about what I'm doing and why I'm doing it. Am I doing it because the market's telling me, or am I doing it because I have an opinion, I have an ego, I have a bias that's crept in from somewhere? My job is to follow the market and to be in tune with the market. So just wanted to mention that in relation to that pound Australian dollar long. So that's it. Just a bit of a record. I'll check in at some point once these trades play out to see where we get to. But that's it for this video. Hope you found that useful, in particular the profit pyramiding. And until next time, take care, and I'll talk to you soon.